Hello and welcome. It's Business Incorporated live on Channels Television. Well, it's still the Davos trading week, and some risk assets, they seem to have recovered some ground after a bloody start to the week. But here are the top stories today. Natural gas prices jump sharply, sending shockwaves through energy markets. And Goldman is betting big on gold, lifting its year-end forecast to $5,400 an ounce. Also, the U.S. dollar is tightening its grip on global trade. SWIFT says dollar usage in global transactions has jumped to a new high. Back to the oil market now. We're seeing natural gas. That's the one shining right there in the energy market today. A big, about 10.22% jump there, $5.37. On the flip side, we see Brent WTI down, but bullish sentiment right there with natural gas. And we're seeing, a lot of coal right there in Europe and most of the other countries there. And that's, causing a rising demand for natural gas. And that we're seeing prices there, shooting up. And there's also indication there might be some supply issues right there. And definitely, we know traders don't wait to react. They react immediately. We'll see if this continues for trade tomorrow. But it's natural gas winning right there in the energy market. Let's get a check now on the metals market. We're seeing gold prices, they ease today after hitting record-breaking levels near $4,900 per ounce as global markets reacted to easing geopolitical tension. U.S. President Donald Trump's shift away from tariff threats and military action over Greenland, that sparked retreat in safe haven demand, boosting the U.S. dollar, pushing the bullion slightly lower. Traders are now watching upcoming U.S. economic data for further cues on the precious metals outlook. So it's a mixed picture right there. Just silver shining, $93.66 per ounce right there. Meanwhile, we're seeing Goldman Sachs. They're boosting their year-end forecast for more than 10% to $5,400 an ounce. The move reflects growing demand from private investors, diversifying into the bullion, alongside continued strong buying from central banks and ETFs. Analysts say these investors are holding gold as a hedge against global policy risk, keeping the metals outlook strong through the end of 2026. Dollar global transaction usage, we're also seeing that hitting a new high according to SWIFT. The U.S. dollar remains the world's dominant currency, claiming 50.5% of global transactions in December, its highest share since 2023. Despite ongoing uncertainty over President Trump's policies, the greenback continues to outpace the euro, the pound, the yen, and the yuan as the preferred choice for international trade. All right, to other stories now. Let's see what's playing out in West Africa. We're seeing data coming out from Ghana there. They're showing that there's reducing poverty there with their multi-dimensional poverty rate falling to 21.9% by the end of Q3 2025, down from 24.9% a year earlier. Improvements in nutrition, education, that's driving gains, though inequality continues to challenge the nation's development goals. That's the big story coming out of Ghana there. All right, to some other matters now. We see members of the Nigerian Automobile Technicians Association are asking for policies that will ensure the attainment of the full potential of the automobile industry in Nigeria. The president of the association, Mr. Aino James, says the sector has the ability to bridge the nation's unemployment gap as well as provide skills and income for young Nigerians. Take a listen.
I will want to start where my predecessor stopped, and I want to create a cooperative, national cooperative, that the association will now self-reliance on finance. We don't want to be going up and down to be borrowing money here and there. If we now do the national cooperative, we can cater for ourselves.
All right, definitely we know cars are really expensive right now, and maintaining cars really, really expensive, at this point. And definitely we know the same old issues. You have to import most of all of that components there for your cars, at this time. So definitely keeping an eye right there on Nigeria's automobile industry. All right, let's discuss something else. We've seen 2025 is already being described by many analysts as a turning point for digital assets, not just because of price movements, but because of how fast stable coins and blockchain-based payments are moving into the mainstream, especially in emerging markets like Nigeria, from rising global adoption to growing use of dollar-backed stable coins for everyday payments, savings, cross-border trade. The conversation around digital money is no longer theoretical. It's now about real economic impact. To help us break it down, I'm joined by Lasberry Oludimos, Vice President, Global Operations, and Managing Director, Yellow Card Nigeria. It's great to have you on the show. Happy New Year.
Thank you so much, Ladi. It's always a pleasure to be here.
Fantastic. Great to have you. And, definitely 2025, huge year for digital assets, stable coins. Even though we didn't see that much price movement, there did, peak at some point. That's talking about Bitcoin, and we see that major drop there. But technology-wise, regulation, huge year, 2025. Talk to me about what the trend you saw so far and in previous year, and what you're seeing right now.
Thank you so much, Ladi. 2025 was actually that year that the space, the ecosystem needed to establish themselves properly, right? And if you look at globally and also what is happening within the continent, you can see that a lot of things happened within 2025, right? We saw regulations. We also saw so many organizations going public. And we saw some people being pardoned, some being prosecuted and all that. So when it comes to regulation, I think the big deal for 2025 was the Genius Act, right? And even before the Genius Act, I think about March 2025, Trump actually signed an executive directive. And that executive directive created a strategic Bitcoin reserve for the United States. Right? And that was just to consolidate all the BTC that have been seized, right, over a long period of time to have it kept in the reserve. And the United States wasn't interested in selling again, but they just wanted to keep it for the Treasury, right? So that sent a very strong message to the government. Right? You can see that the government are now having digital assets as part of their treasury. Then fast forward to July 2025, we saw the emergence of the Genius Act. And the Genius Act is it was like a foundation for every other market that we're not actually thinking about legislating the space to start thinking about the laws, the policies, the frameworks, right, to put in place to ensure that they don't send innovation out of their market space. And one important thing about the Genius Act, right, for stablecoin issuers, it's actually a federal law, right, and it gave opportunity to even smaller issuers to be regulated under the state law, as long as their framework, the state framework, is substantially the same standard with that of the federal law. And you can also see from the Genius Act that there was some sort of priority claim provision in that act. What that means is for every holder of stable coins, right, in case the issuer goes into liquidation, there is a priority claim for every holder of stable coins, even before the other creditors, right? So that actually improved the consumer protection around the whole space. And so many regulations actually towing that same line. And also in 2025, we saw the full implementation of the MiCA Act, right? Where you just have one act and about 27 other markets are complying with it. And once you're able to get a license in one, you're able to operate in other markets within the EU, right? For companies that wanted to scale, and we're not really interested or didn't really have the resources to keep going from one state to another, trying to collaborate with the regulators and obtaining license. That was a very big move for them, right? In terms of what the regulatory space looks like. You can now apply for the license and you're able to operate in 27 other markets. So coming down to the continent, we also saw some movement around regulations, right? Starting with the Kenyan Act that was published last year, right? The Kenyan Act was actually the first substantive law when it comes to digital assets within the continent. And followed, even before the Kenyan Act, don't forget, we had a regulation in Nigeria. And in 2025 too, we had the Investment and Security Act that was published, 2025, that was published, right? And there was a definition of stablecoin in that act. And that act also gave the Securities and Exchange Control the authority to regulate the space. That was even before the Kenyan Regulation Act actually came into play. And we also saw Ghana trying to pass bills and all that. So we saw other markets within the continent either building, engaging with stakeholders to publish their own act. So 2025 was a very remarkable year for the ecosystem. We also saw some organizations that went public, right? Seco went public in the US, and Hashkey also went public in Hong Kong. So 2025 is that year that we can't forget we can't forget when we talk about stable coins, or even when we talk about digital asset, because a lot of things happened. We saw Bitcoin climb from wherever it was to $126,000, right?
Just stop there.
Exactly. Yeah. So that was a whole lot. We also saw institutional adoption. We saw Visa, and we saw Visa having some collaborations and all that. And we saw other institutions trying to do their own stablecoin product or strategy. So a lot happened. AFSA trying to collaborate with Ripple. We saw Discovery Bank having its own partnership. So everyone wants to jump into the space. And 2025 was that year that everyone had to make that decision to be part of this ecosystem. So it was a remarkable year.
Quite the year, definitely. And I'm wondering how that's going to shape, what's going to play out in 2026. But a lot of talk about stable coins. We see that why Nigerians turn into stable coins. Naira was stable though, but obviously before, last year it wasn't that stable. Inflation that's tending downward. Then the FX limits, USD shortages. Then it's also seen as an alternative, to the dollar. So definitely a lot of reasons why Nigerians will want to, use stable coins. What are the interesting trends you see with stable coins?
The thing, I think it's very important we understand that stable coin has nothing to do with speculation, right? Is solving real-time problems, right? And those problems weren't actually created in 2025. They weren't created in 2024. They've been there. But stablecoin has actually come to give us an opportunity, right, to solve those problems. And that's why you see so many people, institutions, businesses trying to adopt stablecoins. And I can say that in 2026, we are still going to see a whole lot, right, because of what has happened in 2025. In 2026, you see more regulators coming up with regulations, right? Even the regulations we had in 2025, there will be full implementation of those regulations in 2026, yeah? And we also see more collaborations between the traditional finance and the ecosystem, right? Like the commercial bank, the telcos, everyone would try to build some sort of product that will work on stable coins, kind of. So it's a technology that you can't really do without, especially for those people in the financial sector, because it's becoming like a payment rail, for not just for the continent, but for the world. And in 2026, we'll see that happen full time. And because there will be more regulations, there will be more people willing to jump into the space, create more products, and there will be more collaborations between the traditional finance and the ecosystem. Right.
So much to look out for, at this point. And I'm still wondering, do we have clear regulation, when it comes to, stable coins, in Nigeria? Very quickly now, we're running out of time.
Okay, for Nigeria, last year we saw the SEC Act that was published. And in that SEC Act, there was a definition of stable coins. And the class is being classified as security, because even the definition of security in the Act included virtual assets, and stablecoins was defined as virtual assets. So you can easily say that the Act sees stablecoins as a security, which brought it under the purview of the Securities and Exchange Control to regulate. So that's what we have at the moment. Probably when we start implementing the SEC regulations, there will be an opportunity to learn more and also trying to improve whatever we need to improve.
I guess 2026, we're just watching at this point.
Exactly.
I'm sure everything will fall in line.
Exactly.
Everyone will fall in line.
Exactly.
Thank you so much. It was great having you for this conversation. Lansbury Oludemoshi, the Vice President, Global Operations and Managing Director, Yellow Card Nigeria. Thank you so much for coming on today.
Thank you so much, Ladi. It's always a pleasure to be here.
Always great having you.
Thank you.
All right, let's talk fashion now. And we're looking at jeans. That's everyone's go-to outfit from students to professionals. But have you noticed how much they've shot up in prices recently? A pair that cost about 9,000 naira in January now sells for about 15,000 naira, 66% jump there. Joining us to tell us why this is happening, Amira Yakubu, analyst of financial derivatives company. Great to have you, Amira. So why are we paying higher for jeans?
Thank you very much. So the price of jeans has increased by 66.7%, as you mentioned, currently selling at 15,000 naira. And this is as the result of several factors affecting the Nigerian retail and manufacturing environment. So firstly, we have the increase in production costs. This is due to the rising use of higher quality and sustainably sourced materials, such that consumers are now being conscious about the environmental and social implications of their purchases, and where many denim jeans manufacturers are now tilting towards producing eco-friendly jeans, such that now that they're ensuring higher quality and more eco-friendly sources or materials in production of jeans, it's now increasing the prices of denim jeans in general. We also have import-related costs here, which is also on the high side. Most of the raw materials used to produce jeans in Nigeria are highly imported, or even just to bring in denim jeans in general is also on the high side. We have to face high import duties, port charges, and also logistic inefficiencies. We also have inflation that comes to play here, where inflation is on the high side. Currently, inflation is at 15.15%. So we see that many of these producing firms here or industries here, they mostly use diesel to power their electricity, and they face this kind of cost in transportation and also bringing down the goods here. So this will bring on high operational costs for the producers, and also the burden the producers cannot bear the burden alone. They have to pass it on to the consumers.
Okay, yeah, I guess another issue for consumers to deal with right now. Thank you so much, Amira Yakubu, analyst of financial derivatives company. Thank you.
Thank you.
All right, let's get a quick check on what's playing out on the All right, definitely looking at European markets right now, and definitely Davos there on the front line. And we have Lars Holter right there. Great to have you, Lars, and definitely we're still tracking Davos this week. But how are the markets in Europe reacting so far?
All up across the board, with the FTSE just up a couple of fractions. The DAX actually doing pretty good, as are the others. So what we're really seeing, that they're all following the US markets. They, of course, posted a huge rally after that whirlwind of events around Greenland that happened over the last 24 hours. Let me take you to what happened exactly in Davos, where hours after his speech at the World Economic Forum, US President Trump took to his social media site to announce that NATO and himself had formed the framework of a future deal. With respect to Greenland, he said that the solution would be a great one for the United States, and he also said, most importantly, I quote, "I will not be imposing the tariffs that were scheduled to go into effect on February 1st. Now, there are no details out on the deal, but much points to Denmark actually keeping Greenland, of course, and allowing the US to increase their military presence there. However, That had always been an option according to a 1951 deal that had given the U.S. exactly these rights.
With that many topics covered, what were the reactions to Trump's speech in Davos? He did have a lot to say.
Well, yeah, indeed, he covered a lot of topics. Greenland, of course, most important, but also he gave out some questionable economic data. He went on and on about how great America is doing. He was raging against green energy, and he was insulting a lot of people, calling them stupid people. So it was quite a speech covering a lot. But when you look at, Ladi, when you look at reactions, they mostly centered, of course, on Trump taking military action against Denmark off the table. Like I said, markets immediately started to rally back from earlier losses, and they extended their rally later when Trump, of course, then backed off on the whole Greenland issue entirely. When he announced that apparently the deal was made. No tariffs, that was certainly great news for the markets. We'll have to wait and see, of course, on what happens to some other tariffs. In response to Trump's speech initially, the EU had shelved the trade deal that it had agreed on with the U.S. last summer. So there is no tariff relief as planned. But of course, under these latest developments, that might change. So we have seen a lot of reaction, but maybe when it comes to this most important part, we don't know how reactions from the EU will really be.
So how significant, was the speech, for the World Economic Forum and its future?
Well, Ladi, extremely significant for sure. However, it remains to be seen whether that's actually a good thing or a bad thing. Early on, and even before Trump spoke, people were arguing over whether Trump had made the World Economic Forum relevant again, simply by being there, by bringing the largest U.S. delegation ever to travel to Davos. One should know that once Trump had actually confirmed his trips, lots of major players, AI giants like Palantir or Snowflake or some of the major tech and crypto firms, they all quickly upgraded their presence in Davos, spending $500,000 each just to rent prime locations along the promenade to make the best impression. However, others, and I read an interesting statement by political economist Mark Blyth of Brown University in the U.S. He said that Trump's impact there is actually, and I quote, the death of Davos, and that the forum had lost all relevance. And it's hard to deny, at least, that the forum has indeed changed. Its slogan might still be committed to improving the state of the world. But this year, all the events around climate change and social entrepreneurship were all but gone after some U.S. government lobbying, that was, by the way. So right now, Davos is purely a playground for those in power. And it will be interesting, Ladi, to see what Davos finds itself a few years down the road.
All right, I guess we'll keep tracking that. Thank you so much, Lars Halter, for the details. Thank you.
Thank you, Ladi.
All right, and right now we see the crypto market in the green with Bitcoin trying to recover some grounds there. In the green, just 1.58%, reclaiming $90,000. We'll see if that continues. But, that's generally how markets are looking today. Looks like risk assets are back, but we'll see if that continues. Thanks for watching Business Incorporated. I'm Ladi Williams from me and the team right here at Channels HQ. Bye for now.